Talk about today's Tuesdays, I should say, and hopefully not today's big slide as well. What's setting up to be a bit of a rebound today, actually. And we've been telling you yesterday, the Nasdaq saw its biggest drop since March. The S&P had its worst day since May as bond yields moved up and investors sweated over the spending drama in D.C. Joining us right now is Galaxy Digital founder and CEO Mike Novogratz. We'll talk a little crypto in a second, but let's talk about actually the markets themselves and what you think is happening here, both on the 10-year side and then on the equity side, as we're seeing this sort of rotation and anxiety start to emerge in a real way.
Yeah, listen, we had, a more hawkish Fed than people expected, period. And I think that with a combination of broad nervousness, because it's been, listen, every single macro trader you talk to thinks, I don't want to short fixed income. I want to be short fixed income, but maybe rates are 100, 150 basis points the wrong price. And so when they start moving, everyone gets nervous, like this could be the time, right? We've had a 25 basis point move in the 10-year. That's basically shifting from, the Fed being a little more hawkish on rates. But deep down, we've got, 4% PCE, 6% inflation, and, CPI numbers. And is it transitory or not? People are really worried that we've got this stagflation coming. And so what the market's playing out right now is stagflation. It's bond yields are up. They should, if you look at a chart, 160 should hold the 10-year. But if it doesn't, where does it go? And so you're going to get a little pause maybe. And I think we'll know in the next couple of days if 10 years pause here. Then stocks will probably find some balance. But, the bond market is a giant bubble. It's been a bubble for a long time. You never know when bubbles pop. You never know when confidence goes. And, you've got Powell's reappointment maybe in more question. He's been a dove. Everyone thinks he's going to be a dove until he gets reappointed. And so a lot of uncertainty around this thing. And so I really think stocks also have, China's slowing. I don't think most people think Evergrande's going to be so contagious, but it's certainly slowing China.
Right. But let's just put a fine point on it. You just said we all know that there's a bubble in the bond market. I think we all know that. Nobody knows, of course, when it's all going to go, it's going to blow up. Are you suggesting this is the moment?
What I'm suggesting is you never know when the moment is. So when it starts moving as a trader, as an investor, as a hedger, you get really nervous that kind of, this is the moment, I'm not short enough. And, would you feel foolish in a year if bonds were at 3% that you weren't really short at 150? And so we all get myopic of trading these small ranges because that's what we've been, lulled to sleep over the last few years. Right, with low interest rates forever, and you look at the Japan analog where 10 years basically became untradeable. And so it's just, I think, going to be endemic to the nature of the market for a while that there's going to be an inherent nervousness when prices start moving.